There's a standby statement in the financial business that past performance is no indication of future performance, and so just ignore it. But on the other hand, if something happened several years ago and it's happening again, wouldn't it be worthwhile taking a look at it and seeing what were the results then and what are the results now? Well, no one's mentioned that in October of 2018, when Donald Trump was president, he waged a economic war against China. And as a result of that, and go back and look at the charts, as a result of that, the S&P sold off 10% and didn't recover from October to April. But the QQQs, and now these are the companies that are more in the tech and in the advanced field, that dropped 23% in October from 100, the QQs dropped from 179 to 137, or 23%. That was in October, and it didn't recover until April. Go a little deeper. Who's getting a lot of merchandise from China? That would be Amazon. In Amazon, the price of the stock dropped from $101 to $65, and a 36% drop in the stock. And it didn't recover until July. So from October to July. And this was all as a result of Donald bringing a economic or a trade war against China. We got the same thing going on again, except we're adding that we're shutting down departments. I think they just shut the education department down. And so people are wondering, what's going to happen to my job? Am I going to have a job next week? So there is fear in the market. And I did a video on that before I went on vacation. And now I want to do a video to explain to you what the Rule of 40 is. And what it basically does is it takes the projected growth of earnings per share, and it adds it to the projected growth of revenues. And if it equals 40, those two numbers equal 40, the hedge funds say, we got to take a look at this. This is a company that has potential growth in front of it that is going to outperform the market. Well, if you don't know what the growth rate of earnings per share and revenue are of the companies you are invested in, you don't know what the hedge funds are saying. That's something we got to take a look at. So I've added that to my Kerry's tell sheet. And so I want to show you that on this tell sheet so that you can look at the 61 stocks that I follow that are all wrapped up in the semiconductor and the AI world, and how many of them are exceeding the Rule of 40. Now, the reality is that in the S&P 500, historically, there's never been more than 5% of the companies in the S&P 500 that are exceeding the Rule of 40. So if there's 500, 10% would be 50, 5% would be 25. But I've got some that aren't in the S&P 500, and I think the Rule of 40 is giving me some heads up of what's going to happen. And then combining that with the trade war that we've got going on and the inflation that we've got going on and the pullback of the market, I think I can find some real buying opportunities. Putting those two things together, putting them on a spreadsheet that is active and breathing and changing as the prices change on the market, and I can make better investment decisions. And guess what? I want to share it with you. Okay, here we are again at Kerry's tell sheet. And if you haven't watched the preceding 3 videos that I've done, starting with the fear factor, a lot of this isn't going to make sense to you. So I'm going to leave it to you to catch up, and particularly if you think there's some value in what I'm doing. I've added something to Kerry's tell sheet, and it's right here. It's called the 40% rule. And what it does, it basically says, if I add Apple's average growth rate over the next 3 years of 11% to its average growth rate of revenue, I'm going to get 11 plus 6.6, I get a 17.6. And what what analysts have realized is to identify a real growth opportunity. If the number equals more than 40, this is a stock we need to explore deeper and find out why its earnings and its revenues are growing and what's causing this. And it's all fundamentals. It's all the financials. You'll find all the answers to why is ACLS earnings per share going to average 70.8% growth over the next 3 years, and its revenues are growing at 23%. Well, what that tells me is two things. One, this is a company that's on a growth path, and in fact, because its revenue is not growing as fast as its earnings, they are becoming more efficient. So more than likely, if I dig even deeper, I'm going to find that their operating margins are increasing as well. They're getting better at what they do, and they've invested the money they need to take advantage of the growth opportunity, and their revenues are going to, or excuse me, their earnings are going to outpace their revenues. So if 40% is where the light goes off, ACLS is screaming, okay? This is a stock that is depressed and has some tremendous growth potential. Current price of $58. Now, you can go down here and you're going to see that there are some that look even more phenomenal. Here's CRDO, 290. And that's because its earnings per share are going to grow by 221%. Now, the other thing you need to look at in this is this a big company? Is it an established company, or is it relatively new? So you can see that CRDO is not that large a company. It's a $7.9 billion company, as opposed to Apple, that is a $3 trillion company. So what I've then done, in the video I said yesterday, were the free throws. Those companies that are established, and they're in this bright blue, that are established, they're going to be a part, and you need to own part of them. But again, that's Apple. It doesn't come anywhere close to the 40% rule. ACLS does. It's a $1.9 billion company. Now, for this part, what I'm calling, we looked at the free throws. Now we're going to look at the layups. And the first qualification in the layup field is it has a market cap in more than $100 billion. So we look at Adobe, a substantial company, but look what its 40% rule is. It's only about half of it. So this is not a company that I particularly want to own, I don't believe. Now what I do is I come across and say, well, what is the potential? Well, it's 25.8% off the high, its 52-week high. That's attractive, but not as attractive as others. So we come down, here's AMD. AMD has a 49% off its high, and it has a 67% under the 40% rule. That is because it's anticipating a growth in its earnings per share. These are numbers provided by Wall Street, by about 35%, and another 32% in the revenue growth, giving us 67. A very balanced number, and a 49% off its high. So if I came to you and say, this is a growth company that has a 49% off its high, would you be happy 2 years from now, 3 years from now, with a 49% growth? I would. So this is a company I need to consider putting in my portfolio and doing some more research. Now, what is more research? How did you do that? Well, if you come over here, I've done a deep dive on AMD. It's a podcast. I have gone out into the internet and I've gathered articles. I have gathered their earnings reports, transcripts from their last earnings report, which was on 2/5. And I've created a podcast that you can listen to, and it'll tell you everything you need to know about AMD. And then it'll give you a written briefing on it if you choose to read it rather than listen to it. And I will add, the next time we come around, an evaluation. This is an AI tool that I've just acquired that to do a financial health. And what I do there is I enter their balance sheet, their income statement, their cash flow statement, and then their last earnings statement. And I ask AI to give me a deep understanding of what AMD is doing, and then give me a projection based on these numbers over here. I ask it to give me an analysis of what its price is going to be in the next 3 years on a conservative, a moderate, and an aggressive basis using the PE ratio that they've had over the last 5 years. So with that, I can get a pretty good idea what AMD's price is going to be, and what kind of a discount I can buy it at right now, 49%, and make a good investment decision. I've even then said, okay, if I know what their earnings are going to be in 2028, in this case, $23.01, and I multiply that times its anticipated PE ratio of 25, I come up with a price potential of $575, and it's got a current price of 100. That's a 5Xer. Okay, does that mean it's going to happen? No, but what it means is I've got more information, and I can make a better investment decision. And I go and do that through every one of my stocks. Now, one of the stocks that I like that very much that is being depressed right now has a 40% ratio of 267%. That's Iren. Iren is a company, it's actually an Australian company that is building data centers all on renewable energy and incorporating Bitcoin mining into it to generate current revenues to pay for the expansion of their additional data centers. And they're expecting, the analysts are expecting, that their earnings per share is going to grow on an average over the next 3 years of 168%, while their revenues are going to grow at an average of 99%. That gives it a 40, the rule of 40, a 267% factor for the rule of 40. Now, if we look at it, how far off it's high, it's currently selling at $7.03. Its 52-week high is $15.88. So it is 55% off its 52-week high. Put all those things together, and it becomes my number one stock. And here again, if you want to know what Iren does, you click here, you get a 15-minute podcast. If you want that podcast in a verbal format, you look at it as a briefing. This will give you the document. You can then download that document, put it in your binder, and you have a running account on what Iren is all about. Then if you want to know what its financials look like, again, a AI analysis of their balance sheet, their income statement, their cash flow statement, and then their past earnings call, and then a projection of what is the price going to be on that stock in 2025, 26, and 27 based on its past PE ratio over the last 5 years. That's what I do for 61 stocks. And it tells me buy, sell, or hold. If it's a hold, add to, take away from, so that I know what I own, what its projections are, and what Wall Street believes the price is going to be. That's even right here. Here's Wall Street's projection on the price of Apple over the next year. It's currently selling at $217. Wall Street believes in the next 18 months it'll reach $251. All this makes you a better investor. Again, this is a living, breathing document. As we're watching it, you may see that some of the numbers change, because what it does is this price is updated every 10 minutes, which then, through the formulas I've built into it, changes these numbers as well. Okay? Then what I do is go through and look at all the analysis I've done. I build an algorithm on it and says, okay, give each of these factors a percentage grade of importance, and then tell me, based on that algorithm, what is my best stock. And as you can see, AMD comes out as my number 2 stock. IRAN comes out as my number 1 stock. All right? Does that make sense to you? This is what financial analysts do. They have the access to all this data, and they compile it. I don't have the $60,000 computer that will do this all for me. I mean, all the way to doing the podcast and the briefings and the health statements and fill all these numbers in. I don't have that. BlackRock does. But the cool thing is, Jensen's going to give it to me. No, he's going to sell it to me within the next 3, 4, 5, 6 months. And so with that, if I can get enough people to come and say, I want to be a part of this. I want to have access to this information. I don't want to have to do the work. I don't want to have to pay Jensen for his unit, his GPU, but I want access to it. So I have the ability to compete with Wall Street. I know now what the 40% rule is. I know how to calculate it, but I don't want to have to go and do it for 61 stocks. Now, the beauty is, once I get that hardware and that software, I can do it for every stock in the world. And I can say, only show me those who exceed the 40% rule, or only show me those stocks who have an average annual earnings per share growth rate in excess of 20%. And it can be all done for me and help me make better investments. If you want access to that, I want to share it with you. I want to make you a better investor. Now, I want you to share in my cost. I'm not going to charge you $10,000. I'm going to charge you $19.95 a month. You're going to go into the description and you're going to find the link to our gold platform. And you're going to sign up. And then you're going to come and see this. And then you're going to show up at my Friday Stock Talk. And you'll ask me personally questions, and we'll talk about how this works. And then you're going to go to our Discord, and you're going to join other people who are in the community, who are learning it and know it, and interact with them on a daily basis. And then I'm going to alert you of every buy and sell that I make in my portfolio relative to this information that I acquire every day. I just dumped a bunch of stock today because I now know who's going to be the big winners over the next 3 years. And I'm taking advantage of the fear that's in the market today. The fear that was just like the fear that was in the market on October of 2018 when Donald Trump went into a trade war with China. Well, today, he's going into a trade war with China. He's going with Canada, with Mexico, with France, with England, everybody. Then add to that tariffs, inflation, the cost of eggs, and you've got an enormous buying opportunity if you know what happened the last time this happened, and you know how the big boys rate stocks, the 40% rule. I hope you learned something today. I hope that I can help you make better investment decisions. That's what I'm dedicated to. I'll do the work until I buy Samantha, and then Samantha will do the work for me, and I'll share it with you. And I will learn every day so that you become a better investor. If you can get that somewhere else for less than $19.95, get it, buy it, stock up on it. Because we are in the investment opportunity of our lifetime. Our world is about to change because all the knowledge in the world is available to you. Not only in investing, but in healthcare. I mean, my God, if I can live another 3 years, I can live another 30 years. Let's work together on this. Join the community, join the tribe, go into the description, and make the decision of 2025 and your future. Talk to you again tomorrow we're going to have lesson number 5.